Alrighty, guys, let's go ahead and get started. Let's jump into our weekly outlook for this week. Thank you guys for joining us today. Depending on where you are, it is either Sunday, December 10th or Monday, December 11th. I'm currently out here in Gold Coast, Australia. It is 11 in the morning on the 11th of December. So if it is your guys' Sunday evening, thank you guys for taking time out of your end of your weekend to attend this free webinar. For those of you guys that may be your first time attending one of these webinars, my name is David Schinkel. I'm the CEO and founder of Positive Traders. I've been running Positive Traders for a little bit over a year and a half now, and I hold this free Sunday weekly outlook just about every single Sunday for free for you guys, to give you guys my outlook, maybe help you guys out with some analysis, but more so to just give you guys an idea of how a professional trader does make a living in the markets and professionally trades the markets. As usual, my disclaimer is that this is just for educational purposes, guys. I am a human. Humans make mistakes, even as a professional trader that trades Forex in the markets full time. We do not win 100% of the time. We don't win 100% of the trades we take. You guys know, based on my portfolio and my track record that I have on my FX book, averaging about a 75% win rate. So there's going to be about that 0.25% of the time that that we aren't, taking winning trades. So, every trader is going to be wrong once in a while. I believe statistically speaking, the average professional trader that makes a living in the Forex markets averages 9 months of wins each year and 3 months of losses. And just due to good risk management, we're always able to overcome those losses and end each month, or each year, I should say, in the blue because of good risk management and good risk rewards on the trades we take. Other than that, if you guys are a premium member, we do our premium webinar every single Monday, Tuesday, Wednesday, and Thursday. Or I guess if you are in Australia, every single Tuesday, Wednesday, Thursday, and Friday. So I do this free one on Sunday, Monday, and a one every 4 other times this week for my paid members. If you guys want to learn more about our lifetime membership, our paid community, you can shoot on over to positivetraders.us. We've got all of our information on there for you. You can also set up a free account on our website. Go through our free Forex survival guide. It kind of breaks down if you're brand new to Forex, feel a little lost in Forex, you don't know where to start, where to get some education. A bunch of resources in there that you can use, as well as a couple other things in there. So definitely check that out when you have time. But without further ado, let's get started. This week, this is going to be a pretty big week in the markets for the US dollar. Throughout this week, we have just our normal, actually the beginning of this week, we can see Monday, Tuesday, and Wednesday. We don't have a lot on tap. We have a couple high impact news. What we're looking for is any folder in red. That's going to be a high impact expected or a high volatility expected piece of news that's going to be released. I'd say early on this week, our main key risk event to be on the lookout for is we have year-over-year CPI for the pound dollar, for the Great Britain pound. So be watching for this. This is a year-over-year report, okay? So it's not quarter-over-quarter, Q-over-Q, or month-over-month, M-over-M. It is Y-over-Y, which is year-over-year. So this particular CPI report gets reported once a year or on a yearly basis. So something to keep in mind. Now, the biggest thing to watch out for this week is come Thursday. Now, depending on where you are at, it may not be Thursday morning. So please make sure, guys, that when you guys hear me saying Thursday, Tuesday, the different dates, this is Australian Eastern Standard Time where I am right now. I am GMT plus 10. So like I said in the beginning of this video, it is 11 in the morning, Monday the 11th, Monday morning for me, 11 a.m. So 11 a.m. on the 11th Monday. So this is my time. If you're in the US, it is going to be a completely different time. So it's important that if you want to know exactly what time this comes out, that whatever economic calendar you're using, I prefer Forex Factories. It's just the one I've been using for years now. that you go up here in the top right-hand corner where it has the little time, and you change that to your time zone so you know what time it's going to happen. But because this may be Wednesday for you, it may be Thursday. So for me, Thursday morning is the biggest thing this week. We do have the FOMC, the Federal Reserve. They are going to be deciding whether to keep interest rates the same, whether to raise interest rates or lower interest rates. Now, we have been expecting a rate hike for a couple months now on the dollar, and it looks like that is what is forecasted. So we can see right here that the right column is what it is currently, or what it was previously, and the middle is the forecast. And of course, this left column that is all blank right now is going to be the actual of what happens. But of course, it's not that time yet, so it is blank. It is forecasted that they raise interest rates from what it is currently, which is between 1% and 1.25%, to between 1.25% and 1.5%. So they are expected, the Federal Reserve is expected to raise interest rates this week. That is going to cause a lot of volatility on the dollar. So if you're trading cross pairs like the euro dollar, you're trading the dollar index, you're trading different high volatility crosses, dollar yen, pound dollar, most of the crosses that we actually trade and we'll be talking about are going to be affected by this Federal Reserve interest rate decision come Thursday morning. Now, also following that, there is, and also at the same time, they do release a statement, which you can read. They're going to be releasing their economic projections for 2018. So lots of good information, lots of fundamental news on the US dollar this week. And then lots of stuff. You guys can see Thursday on my screen, lots of red folders, lots of things. But another thing to be aware of is we have the pound also, the Great Britain pound. They are deciding to keep their interest rates, whether they're going to be raising them, keeping the same, or lowering them. And we can actually see based on the votes, 009. And if you want to know what that 009 means, you can come right here. It says this vote is reported in an XXX format. The first number is how many MPC members voted to increase interest rates, which is 0. Second number is how many MPC members voted to decrease interest rates, which is also 0. And the third is how many voted to hold rates or keep them steady or keep them the same at 0.5% right now. And we can see that 9 people have voted to keep it the same. So it looks like they are going to be keeping interest rates the same, but something to keep in mind, anytime you are dealing with interest rates, that is usually going to cause a lot of volatility in the markets. So Kevin says major. Yeah, absolutely. Yeah, lots of things to be aware of this week. So as usual, this should go without being said. You should always be using good risk management, but if you don't use good risk management, you should extra be practicing good risk management this week. But there's really no excuse to be trading without good risk management, guys. It's just that simple. You're going to lose your money. You're going to blow your account. You're going to, I'm just going to say it straight up. You're going to lose all of your money if you don't use good risk management. So, someone as a professional trader, someone that has been doing this for 4 years, I can tell you, I'm telling you right now, if you don't use good risk management, you're going to lose your money. All right. It doesn't matter how good of a setup you have. You need to make sure you have good risk management. You're entering your trades with good risk to rewards as well as good risk management. So good risk management is just half of the battle. Using good risk reward on your trades is the second half of the battle. If you can enter every single trade using good risk management and good risk to reward, long term, you are going to see success in Forex. It's that simple. So let's go ahead and dive right into the analysis, technical analysis for this week. We're going to be going over all of these pairs over to the right, minus the last 4. We don't look at oil or any cryptocurrency. That is just for my own portfolio, my eyes to see. So let's go ahead and look at the dollar index. Dollar index last week saw a little bit of a rally. Let's go ahead and scale in just a little bit. Looking at the beginning of last week, we were a little bit consolidative of the dollar index. And last week, we pointed out 2 different scenarios. We said there's either going to be a lot of consolidation this past week before dropping lower, or if we broke above this area, we are maybe going to see a retest and move higher. Maybe not that high, guys. My trackpad just moved up a lot higher. But we did see the latter scenario, which was a bullish run in the dollar index. Now, funny thing is, or one interesting level that we're at now, just to kind of play out price so you guys, so some of this stuff makes sense to you guys. Let's go ahead and first let's break down these charts. Let's break down what these markings mean for you. Okay, so let's first start off with the long term. I'm gonna just outline everything in black so you can understand why I have everything on this chart marked off the way I do. So first things first is the descending channel that the dollar index has been in since the beginning of this year, right? We've been bearish since the beginning of this year. Now, this beginning of this year doesn't really fit into our channel, but we are still to the downside. Since the beginning of this year, we had a high made, and then we had a lower high created, lower high, et cetera, all the way down, as well as a series of lower lows on our way down. So that created our bearish trend in 2017. Earlier in September of this year, we broke out right here. We broke out of this bearish channel, and we had a small little bullish pullback on the dollar index to pull back on the downtrend of this year. And that is outlined in this orange channel that we have right here. All right. Now, a couple other things to point out. This level right here, this green level, this is just a major level of if and when we ever got back up to this area. Let's say to the right over here, if we ever got back up to this area, that's where I would expect to see some sort of resistance. Obviously, we can see prices all the way down here right now. That would be quite the stretch, quite the rally up. But if it did happen, if we did pull up to this area, that's where I would expect to see some resistance just based on major support and major resistance, adding some confluence around this level. And we also have our Fibonacci levels. So we have our 2017 high to our 2017 low. I'll just quickly redraw that for you guys so it makes sense to all of you. So we're going to pull from the top of, let me go ahead and pull to the top of 2017 to the low of 2017 so far, which is right about there. All right, so this gives us, with that being said, having that marked off gives us all of our retracement levels. So 23.6, 38.2, 50%, 61.8%, moving up on the pullback up. Now, this doesn't necessarily mean price is going to pull all the way back up, that it's going to go to these levels. These are just areas to be aware of if and when price goes to these levels. So let me go ahead. I'm going to clear out everything real quick. And let's see, what else do we have? We have this right here, this green level, which is our current resistance, which happens to also be at the 23.6% retracement level. But we can see resistance, 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 and we're finding some resistance in this area right here as well. So we're getting into the bias for this week, guys, so hang tight. We're going to give you guys my outlook on this pair for this week. I'm going to go ahead and remove this red dotted line, not as relevant anymore. And the last thing on this screen actually last two things to talk about is, or last three things, I guess, to talk about is going to be this level right here and this level right here. These two big, long horizontal red dotted lines surrounded by a green box. That is going to mark off our major support and resistance on our weekly time frame. Okay, so our major resistance up here and our major support down here. Now, we have some other major support down in this area, some our yearly lows right around the 91 level, but we're more focused on what had happened with this flag previously and how we had broken out of this area and then came back down into this area, and now we're still back in this area. So this zone between the 100.5 area and the 93.2 area has been a significant level for the dollar for a couple years now. So that is a key area to be focused on. Now, bias for this week on the dollar index. We may see some strength on the dollar index after doing some very deep analysis this weekend on the dollar index. especially just based on the fundamentals also of the rate hike generally. If you guys don't know this, you could pencil this down. You could write this in your notes that generally speaking, a rate hike on a currency is going to be good for that currency. A rate cut where they decrease interest rates is generally going to be bad for that currency. And if it stays neutral, it depends on the sentiment at the time, but usually more bad than good. But keeping interest rates the same is for another conversation. Right now, we are focused on the dollar, the Federal Reserve raising interest rates, which is generally going to be good for the dollar. Now, I also want to take a very quick look at the weekly chart. Okay, if we scale in on the weekly time frame, we are back above the 93.2 level, and we have also created a very, very bullish candle last week. So this blue candle that you see is last week's bullish candle, and there is almost no wick on the top of this candle, showing a very strong presence, a very significant buying pressure on the dollar index right now. So I think that looking for buys on the dollar could be a good scenario, but I do sorry guys, I do want to outline one specific level, and that is this trend line right here. So we have a major level of support, resistance, resistance, support, 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 and where we're at currently, which is resistance. So this trend line is the line or the level that I am looking at. So I just wanted to explain all of those levels. I just kind of wanted to break down everything because I think sometimes if you guys come onto these webinars, you might be wondering, why does he have something here? Why does he have this there? And so I wanted to break down these levels for you guys. But this is what I'm looking at this week is watch this resistance level right here, okay? And watch the resistance of this trend line right here. So this area, and let me go ahead and outline it in red. So this area right here where I'm circling in red is kind of, I would call it maybe like the decision zone, okay? Price is either going to find some resistance and make a strong bounce and we're going to continue lower, or we are going to break through this area, possibly get a bounce off of this area and move higher. Now, I am going to be just straight up with you guys. I do not have a bias to one direction or the other this week. I want to see how the markets play out and how reactive we are. Kevin says pivotal point. Exactly. Jordan says trading triangle 2 on dollar index. It looks like it'll spike up. Absolutely has some potential to spike up. Kevin says dollar index analysis on point, breaking it down clean and simple. Exactly, guys. You guys will notice that my strategy for trading, my key, my bread and butter that makes me all of my money in the Forex markets isn't necessarily having, you know, some crazy technical analysis. I know a lot of times when you get into Forex, people assume that you need to know all these algorithms and you need to know these numbers and you need to know how to measure waves and you need to know exactly how to calculate Fibonacci and this and that. And yes, is it good stuff to go over? Is it good stuff to learn and be educated on? Absolutely. Is it something that you need to know to make money in the markets? Absolutely not. If you can understand basic support and resistance and price action within the markets and understand the patterns and correlations that go through the markets, and you can apply that and combine that with good risk management and good risk reward, you can be successful. At the end of the day, it breaks down to two things: risk management and risk to reward on your trades. It doesn't matter how accurate you are of a trader. You could win 90% of your trades. Let me make this very clear, guys. Listen to this if you don't listen to anything else this entire webinar. You could win 90% of your trades, but if you don't use good risk management on each and every single trade you place, you will ultimately fail, because you could have 9 wins in 1 loss. But if you don't know how to manage your risk and you don't know how to control your lot sizes and control how much exposure you have to the market every single time you place a trade, that one losing trade can lose all of those 9 winning trades and then some, and you can lose all of your money with just one losing trade in 9 good winning trades. The beauty of risk management is you could lose 5 trades, 6 trades out of 10 trades, win 4 trades, 5 trades out of 10 trades. You could win 40% of the time, 50% of the time, but as long as you are using good risk management, you will still be profitable. So that is the golden key to being profitable in Forex, guys. This right here that you see on the charts, the analysis, is great. And obviously you need to be able to form a bias, but at the end of the day, you don't have to have 90% accuracy. You don't need to win 100% of the time. So if you're new to Forex, focus less on this and focus more on your mentality and the way you enter trades. Obviously, you need to know how to mark up the charts. You need to focus how to analyze the charts, but you need to focus more of your attention on the risk management and the risk rewards on your trades. So getting back into the dollar index, if we break this resistance area, look for longs. If we hold this resistance area and we bounce off of this resistance area, look for sells on the dollar index. All right. Now looking at gold. Gold may be giving us a clue of which direction the markets want to go this week. And actually our analysis on, we did not capitalize on gold because of the volatility. However, if you guys have been following along with the Positive Traders weekly outlooks, whether you're a premium member watching the daily webinars or you're a free member just keeping up with the 1 weekly webinar that we do for free, our analysis has been pretty spot on with gold. You guys should definitely, and one thing, if you guys are new, one thing I would highly recommend you doing is watching going to our YouTube channel. You can just go to YouTube and type in Positive Traders. I think we have over 100 some videos on there, all of our weekly webinars for the past 1.5 years. And I would just watch maybe this one, of course, and then I would watch the last 3 or 4 webinars that we do, just so you can get an idea of how I trade, and you can actually see that the analysis that I give out on these webinars is pretty bang on, is pretty spot on. Just because if you would have watched the weekly webinar from a couple weeks ago or last week's or you know the past basically 4 or 5 weekly webinars, we have been sideways. We were sideways on the dollar index on gold for quite a while, and we were expecting downside. I had told you guys that my long-term targets were around the 1250 level, just due to the nice consolidation of this area and expecting a break to the downside and then moving lower. That is what we got. I actually there was an opportunity to catch the top of this. I told you guys around this area we were probably going to bounce off of the 1300 level. I think somewhere around this area before price had spiked up. I told you guys we were probably going to bounce off of the 1300 level, and then price would probably find its way down to the 1250 level, which is what happened. Now, we saw last week a very large sell-off on gold. I think that has a lot to do with, in combination with the strength that we saw in the dollar. Now, looking at the weekly chart on gold, big push to the downside last week, and I would expect probably to see more downside on gold this week. I think you might be able to make targets around the 200 weekly moving average, which is, I believe, going to be right around 1230. Let's go ahead and take a look. Yeah, right around 1230, 1232 area. So that's about $28 more, or I'm sorry, not 28, about $18 more on gold lower. If you guys don't know what this measurement is, that is the cost per troy ounce of gold. So right now we can see gold is at 1247.54, and that is, of course, versus the US dollar. So what this is saying is that to buy 1 troy ounce of gold, it is going to cost you $1,247.50 of US dollars to be able to purchase an ounce of gold. So I would probably expect, just based on the way the daily candle, just the way the price action is forming on gold, I'd probably expect price to move lower. Now, there is this green level right here. So this green zone, I'm actually going to remove a couple things. I'm going to remove that. I'm also going to remove just this for right now. If you guys don't know, you guys will notice I also have, sometimes we will look at counting waves. Sometimes we will look at, there's something called the quarter theory. If you guys are not familiar with the quarter theory, it is the even numbers. So for gold, for example, a good example of the quarter theory is marking off the 1300 level, the 1250 level, the 1200 level. Every $50 on gold is a good area to mark off. So you'll see that the most recent one in the middle, and the most recent resistance and the most recent support I have plotted for gold, and we are at that quarter theory. We are at the 1250 level on gold. We've been very, very bearish on gold. Now, we may see a little bit of a pullback on gold before moving lower. If we do decide to move lower, we can go ahead and maybe like mark off this drop that we just saw. And we may see gold make a little bit of a pullback. It may not make a pullback, right? It may not make a pullback. It could maybe just consolidate down in this area and then move lower. But if it does make a pullback, expect price to probably pull back to somewhere in this area where we saw some major support, and resistance earlier this year, and then possibly going lower. But overall, I think gold does look pretty bearish. We're probably expecting gold to move a little bit lower. Let's go ahead and look at EURUSD. Now, EURUSD, I don't need to spend too much time on, guys, just because if you look at the dollar index that we just did some very in-depth analysis on, and you look at EURUSD, and I would definitely write this down if you guys are new to trading or new to these webinars to understand this correlation, that the dollar index has a 95 to 99%, I would even be as bold as to say almost 100% negative correlation to EURUSD. So if you look at these two charts, they are literally a mirrored inverted image of each other. So you guys understand the analysis that we just did on the dollar index. So now looking at EURUSD, things should be pretty clear to you. You should see that how we talked about that long-term up-down trend on the dollar index. We see that long-term uptrend channel on EURUSD. And then we see the break that we got in September to the downside, which on the dollar index, we got that break to the upside. And now the same, very similar trend line that we had on the dollar index. Let me go ahead and draw out the trend line. We have this area right here, okay, acting as current support that we can see that we bounced off of on Friday, whereas we have that major resistance. Watch, I'll just quickly flip back, the major resistance right here on the dollar index. So hopefully that makes sense, that you guys can understand that these are the exact opposites of each other. So with EURUSD, I see two scenarios at this point, and it's the exact same scenarios as the dollar index. We are either going to see this trend line act as support, and I'm actually going to remove a couple things, guys. I'm going to delete that, and we'll pull this back a little bit. Yeah, okay. So remember I told you guys our pivotal area, or our major zone that we're looking at, our key area on the dollar index was just a little bit higher where price is currently. With EURUSD, it is going to be just a little bit lower where price is currently, where this trend line and this support, and well, I wouldn't even necessarily say just support, because we have support, resistance, support, resistance, where this area meets. So right here, it's kind of like our golden zone. And so one of two scenarios this week, we're either going to find a bounce off of this area, moving into a higher exchange rate on this pair, or we're going to break through this area and bounce and move lower. I will tell you guys, honestly, if I had a gun to my head, had to decide a bias of which direction I'm biased to, I think that the dollar could find some more strength this week. I think that this scenario to the downside, that this break of the support and moving lower is probably a little bit more probable scenario than the dollar index or than this pair moving higher. But please make sure you guys take this analysis with a grain of salt. I am only interested in selling Euro USD if and when if and when this zone right here is broken, okay? If we create, let's say today, if we create a big bullish candle, let's say today's big candle is bullish, something like this, then obviously I am not going to be interested in selling Euro USD. That's going to show up a strong presence of buyers, and I would probably expect price to move up higher. But if we start to consolidate a little bit in this area, you know, maybe pull up a little bit and then pull back down and then consolidate and then finally break and then maybe get a retest, that is going to give me more conviction to the downside than anything else. So please be watching Euro USD this week. I think there is going to give us some good opportunities just based on price action. Kevin says with expected rate hike coming, should see downside. Exactly. That's another good example too, not from just a technical standpoint, but from a fundamental standpoint as well. So that is the analysis on Euro USD. Now, USD Swiss franc. All right, USD Swiss franc, not a whole lot to talk about on this pair. I do want to show you guys this retracement level. Boom, boom, boom. There we go. You can see that there's a lot of confluence on this pair. That is our, what I just fibbed out was our yearly high to our yearly low. And now we can see all of our retracement levels to the upside, which we have seen. And it's actually very nice to see some confluence. This support, this support, this support, this support right here all have confluence with the 50% retracement level. And this resistance, 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 a little bit of a resistance zone right here, and support that we saw at the end of last week and beginning of support at the beginning of last week, and support at the end of the previous week before last is our 38.2% retracement level. So lots of confluence with this level. I did very quickly, if we scale in, I did very quickly outline just some minor resistance that we're finding on USD Swiss franc. And interesting to see this resistance. So pretty much, guys, very similar to Euro USD. We are either going to respect this resistance, find a bounce, and probably come back down to the 38.2% retracement level, which is also the top side of this descending trend line, or we are going to break through this area, maybe find some consolidation or a retest, and then move up higher. I would be probably more favored to the upside just based on expecting some possible dollar strength throughout this week, but we will see what happens. So that is USD Swiss franc. Pound dollar. Pound dollar, guys, lots of confusion. I haven't been interested in trading the pound dollar. We saw lots of confusing price action on this pair last week. That's also due in part to, I think last week, why the markets were a little bit confusing, not the best to trade. So we were on the sidelines last week, but we saw bullish engulfing candle, and then that following day, just a huge bearish engulfing candle. So there is just a lot of consolidation, lots of indecision on this pair. I will just 100% be on the sidelines right now. And I'm actually going to delete this trend line. I am also going to delete, I'm going to remove this alert for now. And I'm also going to remove that. All right, so we have just a little bit cleaner charts on pound dollar, and we will look at trading the pound dollar once it gets to a better level of trading. I'm actually going to just completely delete everything on this chart right now. I don't think that there's anything else on here. So we're pretty bullish on pound dollar right now. I mean, just the overall trend is to the upside, is to the top side. We have a little bit, one thing I might look at is we have kind of a little bit of a zone in this area. All right, we can see some major resistance, a little bit of resistance before we broke out, resistance, support after we broke through, and we actually found a little bounce off of this area last week. So just using one line, one level on pound dollar, but overall bullet biased to the upside on pound dollar, but I'm not interested in trading it. Pound yen, I think this is gonna be an interesting week for pound yen. I think that we could see some upside on pound yen this week. So watch for upside, watch for a daily candle to close above our yearly highs. So we actually made a yearly high last week. What is that? I think that it's like the 153.40 level. Let's go ahead and take a look. Just about, actually, yeah, exactly. Yeah, 153.40 level is where we saw price reach last week, testing testing yearly highs. Now we did, again, our analysis on pound yen. If you guys have been following Positive Traders, or whether you've been following the weekly webinar or the daily live webinars in our premium group, our analysis has been fairly spot on with pound yen. Last week we were expecting, or not last week, I'm sorry, the week previous to last week, we had seen a lot of consolidation for a couple weeks on pound yen. We are expecting a bounce off of this area and price moving up higher, and that is exactly what we got. I told you guys that this analysis was also based off of just previous structure in the markets. Pound yen, we have some structure right here. We also have some structure right here where we saw some consolidation, lots of consolidation before a big breakout to the upside. And that's what we saw over here. So a lot of market consolidation, nice structure, and then a push to the upside. This week, I would expect upside on pound yen. So watch for upside on pound yen. Also last week, if you guys did follow our analysis, after we saw this big rally, we were expecting a possible retracement to the 50% retracement level, which is right here. That's exactly what we got. So after this big push to the upside, we measure our retracement down to the 50%, and now we are pushing back up. So I'll just tell you guys right now, if we see a daily candle break above this zone right here, our yearly resistance zone right around 153, expect some major moves to the upside, hundreds and hundreds of pips to the upside. All right, so something very key to be watching. At the end of last year, if you guys do remember, towards the end of last year, we saw a big push to the upside in pound yen. We saw a big push to the upside in dollar yen as well. And you guys know that history repeats itself in the markets. We tend to see the same things that have happened in the past happen again. And so I wouldn't be surprised if going into 2018, the rest of this month, we saw a big bullish push for pound yen and dollar yen. So my eyes are to the upside on pound yen. Dollar yen, haven't been interested in trading dollar yen. I told you guys, really not interested in touching dollar yen until we get back above this 61.8% retracement level, which is this zone right here. And matter of fact, we are getting very close to that area. We can only see that, or we can see that we're less than 100 pips away. I believe less than 100 pips. Let's go ahead and measure that out real quick. Yep, only about 75 pips, so less than 100 pips away from retesting the 61.8% retracement level. So that retest could happen this week. But I've been telling you guys for a while, my bias would be if we get up to the 61.8% retracement level, look for a break, a bounce, and then moving higher into 2018. This right here, if you guys look over to the left over here, this is actually that rally at the end of last year that we saw on dollar yen. And we may see a huge rally again on dollar yen. It's going to be interesting to see what happens. But I would probably expect some upside on dollar yen. So those are those two pairs. Let's wrap it up with these last three pairs. AUDUSD and NZDUSD are both AUDUSD. I'm going to tell you guys right now, not interested in trading because of one reason. Because we're potentially looking for buys on for sells on EURUSD, buys on the dollar index, and we are at a major low. you know, this may give us some opportunity to the downside, but I mean, price action is pretty clean. What would give me interest in trading AUD/USD is if this week, if we maybe retest the support of the previous consolidation that we broke out of last week. So if we retest that area and then maybe see some downside on this pair. Okay, and then maybe go and retest these lows around this area. But you guys know that anytime we have broken the lows, we have been targeting extensions. So we had our first extension right there that we targeted our 161.8% extension level. We hit that target. We also actually had the extension above that as well. This extension right here. Boom. Look at that extension. Look how well the extensions work on AUD/USD. Very, very nicely. See that the extension, we found some support right there once we broke the lows. You guys don't know what I'm looking at. I'm looking at this pullback. I'm measuring this pullback right here. And then once we broke through the 100% retracement, which is right here, we move on to our extensions, which is our first extension, the 161.8 right there. So we saw that met, and then we also just did the other one. And then let's see for our current break right here. The 0.7460 area would meet our next extension level. So that would be 3 extensions, this extension, and possibly this extension to the downside. So I'm watching for the extension level to possibly be met on AUD/USD. That's also going to give us some good confluence to the bottom side of this channel that we've been in. So again, if we see dollar strength, which looks like we could see, look for sells on EURUSD, sells on AUD/USD, buys on pound yen, buys on dollar yen, that type of thing. And I'll go ahead and delete that. And let's look at NZDUSD. New Zealand dollar, US dollar, I think is going to give us a good trading opportunity, guys. We have a very nice trading wedge on AUD/US or on NZDUSD. Now, we have been trading in this little triangle for quite a while. And this is my bias, guys. I think price action on New Zealand dollar, US dollar is very, very clear. Okay. Also, let me just show you guys what a couple of these green levels mean. We can see that actually, hold on, I'm going to delete a couple things. No, actually, I'll keep it all. Actually, all is fairly relevant right now. So this is our major level that we're at right now. Obviously, right here where we're consolidating, but why do I have this green level marked off? Well, not only is it the 50% retracement level, right? We can see, boom, we are now at the 50% retracement level right here. But this green zone also marks off resistance, 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 support, support, and support in this area. So obviously, we are bearish on New Zealand dollar, US dollar. We've been bearish since the beginning of not the beginning of this year. This actually is the beginning of this year. For the past couple of months, we've been very bearish on New Zealand dollar, US dollar. Now, going into possible trade setups, possible trading opportunities for the week, look at the daily chart on New Zealand dollar, US dollar, and you can see this probably makes a little bit more sense now. This green zone makes a little bit more sense. Where we're sitting is that weekly support. But we can also see that we have created this pretty big bear flag on New Zealand dollar, US dollar. And we've seen some resistance right here, resistance right here, resistance right here. So that is why we have this descending trend line. And so basically where we're at, guys, where prices is at right now is this little wedge. This is kind of going to be the deciding factor for New Zealand dollar, US dollar, is in between the resistance of this trend line and the support of this flag right here. One of two things is going to happen. We are either going to break out of this trend line, probably find a bounce off this support and then move up higher, and then reevaluate price action at that point, or probably the more likely scenario, just based on price action, how we are very bearish, long-term bearish on New Zealand dollar, US dollar, possibly looking at the dollar index rising based on the interest rates being hiked this week going into next year, is probably seeing if we see this support break, bounce off of the support, and then moving lower. That's probably a more likely scenario. This is going to be down to the 60. You guys know we pointed out this right here is the 50% retracement. So this right here is going to be the 61.8% retracement level. So this would be my next target. I also want to see if any extension levels line up well with this pair. Let's take a look at this. Actually, yep, boom, right there. All right, so there is our extension. Look at that. Look at that confluence. So nice. I love when the markets just work up nicely. So not only do we have a nice, is this our 61.8% retracement level, but it's also our 161.8% extension level. So good targets to the downside on New Zealand dollar, US dollar. And finally, looking at USD CAD. Not super interested in trading USD CAD, but I think that we could get some potential buying opportunity if we break through the top side and see some downs and maybe get a retest and then break to the upside. So that is that. That's that, guys. That's really all I have. USD CAD is obviously pretty consolidative right now, so looking for some resistance. So I think the analysis is pretty strong this week. Now, one offer I want to make to somebody out there watching these webinars, you guys can feel free to message me. Probably through Facebook is the fastest way to get a hold of me, but I do want to make one offer to somebody that is willing to do this. I don't know how much I will pay you, or maybe I will give you free membership to the group for some time, or this or that. I need to figure out exactly what I will give away. But this is going to be offered to one person that is willing to do this, and you have to be dedicated, because I'm really just looking to get one person, not have to look for anybody else again. But for these weekly webinars that I do, specifically, the free one that I do, I'm not worried about the paid ones. It's just really these free weekly ones. I am looking for somebody that watches these webinars on a consistent basis and is willing to jot down the times that I go from each pair. So, from the time when I talk about the dollar index and, let's say like 5 minutes and 30 seconds, I start talking about gold, kind of jotting down each of these. So that way on YouTube, when I upload these to YouTube, in the description, I can just write down each of the pairs that I go through and what time I start talking about them, also for our Facebook page. So if there is somebody out there that is willing to do that watches these on a consistent basis, that wants to, at the end of each of these weekly outlooks, give me a little, send me a little message on Facebook saying, hey, you talked about each of these at these times, willing to compensate them in in some way, shape, or form. So if you're listening to this, whether you're listening to this live, listening to this on the recording, and you feel like you are up for the job to do that, I will find a way to make sure you guys are taken care of. Jordan says the call was amazing. Thank you, David. Looking forward to this week. Absolutely, Jordan. Looking forward to a good trading week. Kevin, you said this week's fire analysis was fire. Absolutely. I think there's going to be some good trading opportunities this week. So that is this week's weekly analysis. I hope you guys have a wonderful rest of your week. If you are a free member, I will catch you guys in 1 week from right now on next week's free weekly analysis to see how this week played out. Be careful with FOMC this week, guys, and the Federal Reserve raising interest rates. If you are a premium member, I'll see you guys tomorrow at around 10 p.m. Eastern for our first live session of the week. If you want to learn more about Positive Traders, please go to our website, positivetraders.us. Not .com, positivetraders.us, and traders has an S at the end. Positive Traders with an S .us. That is our website. You can go on there, sign up for a free membership, check us out, see a little bit more about what we do, watch our track record, and that's that, guys. That's all I've got. So have a wonderful week, guys. Catch you guys later. If you have any questions, please feel free to message me. And other than that, guys, have a safe trading week. Remember to use that good risk management and good risk rewards on your trades. But other than that, take it easy, guys.